Hello, this is Ed Burke with PlaceForTraders.com for Monday, June 1st. Starting off in the June Mini S&P, in my last video I talked about the pivot level for Friday of 925. Above 925 in the June Mini S&P was considered bullish on Friday. Below 925 was considered bearish. I had the first line of resistance up at 913.75, the second line of resistance up at 923.25. These are 15-minute bars. This is where the regular trading session opened. You can see we're in a bullish mode above the pivot level. Prior to the regular trading session, you can see we bumped up against that R1 level, and it served as a resistance as the market traded lower off that. You can see here that in the first half hour of trading, we had some volatility. The market went down close to the pivot level, but stayed above the pivot level in a bullish mode. Then the market rallied back up. When we sold off in this area, I did send messages out to people that we're in a bullish mode. View this little pullback as an opportunity to get long or buy the June Mini S&P. You could see that besides the volatility in the first half hour of trading, the market stayed in a small, tight trading range. We went up to this high of 910 in the afternoon. I did send messages out to people. Look to take profits around that first level of resistance, right around 913. You could see that we had this big surge in the last half hour of trading. In the last half hour, we broke through that first level of resistance and the second level of resistance, going all the way up to 927.75. That rally really came out of nowhere. We're trading in a really small, tight, quiet trading range, and then the market just exploded in the last half hour. The market ended up settling at 918 even. I guess obviously buying the market on this pullback, and then the better play would have been to hold that trade into the close. But like I said, I didn't really see that big of a rally coming. Usually rallies of that magnitude or moves of that magnitude are headline driven off of some kind of news. But whether you got out at the first or second level of resistance, obviously it's better than being short or a sharp stick in the eye, I guess. For Monday, I'm looking at the pivot level of 916.25. Market settled on Friday at 918 even. We need to stay above 916.25 for a bullish market. Below 916.25 is considered a bearish market. I have the first line of resistance up at 930 even. The second level of resistance up at 941.75. For support, I'm looking at the first level of support at 904.5. The second level of support at 891 even. I also have the weekly numbers. Weekly pivot 896 even. To stay bullish on a weekly time frame, we need to stay above 896 even. First level of weekly resistance up at 917.25. Second level of weekly resistance up at 944.25. For support, I have the first level of weekly support down at 869 even. The second level of weekly support down at 847.75. Some numbers that come out, 8:30 a.m. Eastern Time, you have personal income and personal spending. The expectation is for a negative 0.2% on both those. And then at 10 o'clock a.m. Eastern Time, you have a couple numbers. Construction spending, the expectation is for a negative 1.8%. And then also 10 o'clock, you have the ISM number. The expectation is for a reading of 42 on that index. That's all I have for this evening. Thanks for tuning in. If you haven't gone to my website as of yet, it's PlaceForTraders.com. You can go on there and sign up for the free alerts. Thanks a lot and good trading.